What's going on? New intro, who dis? You've heard of Spotify Wrapped, but have you heard of Forex Wrapped? This is my year-end review. I just wanted to go through the big key takeaways that I learned recently that I just going through my data. Super important that we're journaling and that we're collecting this data throughout the year so that we can look it over and know what to improve on for the following year. I took 79 trades this year. This is from, it was about 10 months out of the year. For the first 2 months, I wasn't trading. I was forward testing. And those 79 trades, my most taken positions were in gold, GU, and then Euro. As you can see, I had more losses than wins this year. But I think I had a bigger mental winning year than anything this year. So profit's profit, lack of profit's lack of profit, but it's all good. Session dominance, I had the most trades in London. This was actually surprising to me. I consider myself a New York trader. I think I was just at work, working nights more this past year, so I was trading London session more. I am a New York trader, though. I feel the most comfortable trading New York when I'm at home and just organized. And yeah. So these are a couple of takeaways from GU. I'm really good at identifying higher time frame trends and structure with it. I like the way that it moves, and it's just, I've since reduced the amount of pairs that I'm looking at from about, I don't know, 3 or 4 weeks ago. I went down to GU and EU because I was noticing most of my trades were on those pairs anyway. So yeah, I'm good with identifying its structure, not so good with exiting early. A lot of my trades were going to full TP after I'd already exited because I got myself scared. And then my intraday held too long, the exact opposite of exiting early. I was holding trades over sessions. So, we since corrected that. That was something I knew that was probably happening. And, I'd find I'd hold trades in London into New York, and the New York volatility would crush that trade, and it would end up being a loss and unnecessary loss. EU, pretty much the same thing. Good at identifying structure, point of interest, and trends. Shaken out easily and trusting analysis. A lot of times my original analysis will be correct. Halfway through the session, I'll get some FOMO, I'll get scared, and then I won't take the trade I originally saw, and I'll take a losing trade instead. Gold is my best RR. Again, identifying trends, seeing structure. Gold likes to trend in the same direction to higher time frame liquidities. I noticed that. That's how I execute on it. I just need to work on missing entries and entering too early. I need to find the sweet spot in that 4-hour zone I'm entering, whether that's on the 15, the 5, the 1 hour time frame, and just find some consistency within an entry time frame. I've been testing swing trading for the past 2 months, forward testing these, and these are the things that I've noticed from my forward tests. It's just I'm taking weak breaks of structure and using those, and it's invalid, wicking down, and then the candle closure doesn't break structure. I need to set limit orders at the extremes of the fair value gap. So many times prices come into the fair value gap a smidge, and I'm waiting for it to a deeper draw, and I'm not getting it and missing entries. Higher time frame liquidity draws. Again, I need to take into account those dailies, those monthlies. The higher time frame is a big thing for swings. Red folders, I'm pretty good about avoiding red folders on my intradays. I just need to be aware where they're at when I'm entering swings and when I'm thinking of exiting. And then exiting when structure breaks down. Same as my intraday. If price is consolidating, I'm going to exit because the structure's broke down. I need to do the same with my swings. I've recently just really tried to hammer holding the whole position, but I know enough about charts and TA to know when structure's breaking down, when holding that position maybe isn't the best thing to do. Session timings on my intradays. This is something that's pretty funny that my mentor helped me out with. My session timings were a little bit off, so I've since corrected that. I have a bit of a gap between London and New York now, and that's helped a lot. Holding trades over rollover, so I'm not holding these London trades into New York. news candles, understanding, the last couple videos, we kind of talked about news and how those candles affect price. So I'm implementing that. Session liquidity, again, high of day, low of day time frames, or high day, low day session liquidities. News taking out that liquidity, just being really aware of where the liquidity is at for both my stop losses and my targets. And these are some of the emotional triggers. These aren't specific ones. These are umbrella terms: fear, impulsivity, and negative feedback loop. Fear is just FOMO, missing out on trades. Impulsivity, I find that I've missed my original trade and then I impulsively get into the next one that I think looks okay to make up for that loss. And negative feedback loop, I can be pretty hard on myself, and I get stuck in this ruminating headspace of negativity because I'm missing trades or I'm losing trades, and it's not allowing me to trade from an objective point of view, and it's just not a winning mindset, really. The 3 R's is something I learned to help me focus back on the charts after noticing my triggers. Recognize, regroup, and refocus. Recognize the trigger, sit with it, allow it for a second, regroup your thoughts, and then refocus back on the charts. It's just about interrupting that thought. Process orientation. So the things that I know I need to work on for the next year, through my review, my biggest issues have been psychological. So I think to combat this, it's increasing my journaling frequency, how and what I'm journaling, and just kind of making some consistency with my layouts of journaling, and just really quickly being able to grab the data through that. Weekly reviews, daily reviews, and trade reviews are all mandatory. So many times I'll journal this later. It was a loss. It hurts. It's trying to ignore it, but just really being okay with that, and just holding yourself accountable. I put my data into an AI bot, and it was really good to see a lot of the things that I noticed throughout the year were the issues that were affecting me. So nothing was really a surprise to me. So I have a real clear layout of what I need to do to improve for next year. And growth over time, I think it's harder to learn from the good things than it is the bad things. So a lot of these look really negative, but they're not. These are all just things that I know that I can fix. So I'm going to work on it. But it's also important to recognize where we've come from. And when I started this in 2020, I was looking at baby pips to see what a pip was, what is a lot size. In 2022, I was a part of a MLM. You have to excuse the fire truck outside. I live near a fire hall. I was a part of a multi-level marketing scheme, and they said they were teaching me how to trade, and it was garbage. They took my money and taught me a lot of bad habits. 2024, I really focused on a process orientation, and really I started to understand, this, I'm not going to get rich overnight doing this. It's not that quick montage we talked about in the first video. This is years. This is going to take a while. You don't go to university, get a 4-year degree, and expect to make $1 million your first year out. So, I'm putting in my time dividends right now, because I know that at some point, monetarily, I'm going to start getting back what I've put in. And consistency. I think this year I really found consistency, both emotionally and work ethic, and just really what consistency really is. Showing up 4 days out of the week on my trading days, taking sacrificing the other things in my life for trading, and just the journaling, studying, back testing, just putting in the time, doing it properly. Consistency, again, monetarily will come, but for now it's just about building that foundation. I really, they say consistency and process, and you don't really know what that means until you're 4 or 5 years in. This year, I didn't blow any accounts. It's my first year trading that I didn't blow an account, and it took me roughly 4 years. I mean, there's some time off here and there to actually get to that point. 4 years to get break even, essentially. So, I'm happy. I'm not where I want to be, but I'm also not where I was. So things are good. 2026 is going to be an unreal year. And yeah,